Hello and welcome to Wake Up and Smell the Profit S&P and Q's review for Tuesday, July 11th, 2023. It's now the 10th at 7:10 p.m. Central Time. We start off in the Q's daily chart looking back to the October low. I'll zoom into the current area now, but first, those long the Q's and some of the big fat cap mega technology stocks should take a big whiff of their profit now, because I just got word today. I was watching Bloomberg near the end of the day, and someone was on there mentioning that the NASDAQ is going to rebalance the NASDAQ 100 to unweight some of the Magnificent Seven, as they've become 57% of the index. So they're going to reweight that. So portfolio managers, institutionals, and etc. are going to have to rebalance customers and clients' portfolios. I don't know how they're going to do that, but I think it's already started, as some of the industrials and the likes of the cyclicals like that are getting a bid. I think they're jumping out of tech already. But anyway, we just keep on keeping on here. And we're in the Q's chart that looks at all of the bands, the Bollinger Band, Channel 3 High, and the Stark Band, and the line. So here's the upper Bollinger Band, the high Channel 3, upper Stark Band, middle Stark Band, Bollinger Band, mid band, the low Channel 3, the lower Stark Band, and the lower Bollinger Band. And it has a supply line, which for the 11th starts the day out at 370.97, and a close above that will qualify that level. And there's the demand line down here, which for the 11th starts the day at 365.42, and a close below that level will qualify the demand line. And there's still a qualified demand projection from this qualified demand line, and it will be valid for one more day. So if this gets qualified for this line, then we'll get a new demand projection. But if it makes it down there fast enough, this is a good level for possible buying opportunity at this qualified demand projection. And the Bollinger Band is right there too. And here's the Q's daily chart that has the momentum levels. Here's the up and the down momentum level for 50% and 100%. And the only level in danger of becoming qualified for the 11th is the disqualified momentum down. And a close under that level will qualify the 50% and 100% momentum down. And the 50% and 100% exhaustion downs. Here's the 50%. And chart lines has printed the long-term oversold P alert down. ATM chart lines here, sort of a companion to the ATM trigger down here. And if this level here, this P alert down, was one of these cayenne colored ones, long-term overbought P alert up, I would take it more seriously. So I don't know what they mean by oversold P alert down, as it's a contrarian indicator. This ATM trigger pressure down, that's the P alert for pressure here, and it's already down because it's in the up level here. So it's somewhat of a contraindicator. Like I said, if this was over here, then I would take it a little bit more seriously for some downside, but to consider this for more upside, I take that with a grain of salt, but let's see what happens. I mean, this one here, long-term overbought P alert up, so that would give me the indication that this ATM trigger pressure down is going to head downwards. That's where it's called the pressure alert up down here. But you can see just by the cloud lagging line what happened. So this is an indication of current price for the day. So we had nothing but upside here. So that was a false indication there. And probably this one too. We'll have to see what happens anyway. Before the momentum down levels is the Ichimoku baseline, so that should be pretty good support. And the rainbow pattern is going on nicely. Here's the blue 20, it's in faint blue, the red 35, and the gold 50, just about as perfect as you could ask for here. So you can see the rainbow pattern started back here in February, end of January. 20 went above the 35 and the 50. Then the 35 went above the 50, and then we had the rainbow pattern going on. The 20 went back under the 35 for a little while, and then went back above it. So this crossover happened in March 28th, so beginning of April. So that's, 4 months that this rainbow pattern has been going on without a cross under of the 20 under the 35, but it certainly is nicely spaced apart here. And the Shande indicator hasn't been below zero line in the negative section since way back here when it came out of it in April on the 26th. So that's a long time above the zero line, so it's a little bit under now. And even worst case scenario back here went down to negative 34. And as suspected from some of the previous videos, the slow trigger up went back above the overbought line and met the fast trigger up, and the pressure is down, but it's up, so that's your contraindicator there. And yeah, it's poised for it to head down. First it would be the fast trigger would make a run for the oversold line here, and then the slow trigger would try to make another move. You could see it just hasn't been going down to that oversold line. Maybe it's due, I don't know, it's just too strong, but this rebalancing thing that the NASDAQ is going to do to the NASDAQ 100 could throw a monkey wrench in the works.